Okay, thanks, Dahlia, for returning to Financial Nirvana Mama YouTube channel. Now, we have a crazy topic today. Trigger rates. Um, there's a lot that's coming out of my head, a lot of questions that I have for you. This is a big change, it seems like, because of the increasing interest rates. So, I think as an introduction, Dahlia, maybe can you explain what trigger rates are?
Yes, trigger rates are the rates that get us really angry and frustrated and upset, and we get to throw things around. I'm kidding. Trigger rates are basically rates that trigger a higher payment when you are in a variable rate product where your payment has been staying the same as the Bank of Canada raised the rates. I will demonstrate that through an example, but that's essentially what it is. It's a point that the payment hits at which it triggers a higher payment for products that are variable rate mortgages with a fixed payment.
Okay, so the key is that it's a fixed payment. So for those who are watching this video, it's your mortgages where basically your payments have really not changed.
Exactly, because there are two flavors, Tracy, of variable rate mortgages. There is a product where the payment changes when the Bank of Canada changes the overnight rate. That is actually called an adjustable rate mortgage. It adjusts. And then there is a variable rate mortgage where the payment stays the same, but beneath the surface, what goes towards paying principal versus interest changes as the rates rise. As the rates go up, what goes towards paying interest goes up. That's what happens beneath the surface.
So if you're in a fixed payment mortgage, then you possibly could be close to the trigger rates. And so just curious, like, does this apply to all banks? Is this like a Canada-wide policy?
So not every bank offers this product. Not every bank offers a variable rate product with the payment stays fixed. Some banks use the term variable rate, but the payment actually changes. So you would know whether or not you're in this product based on what's been happening the past few months. You took a variable rate, nothing has changed on a monthly basis, you're likely in that type of product. Just knowing the lenders out there, I know CIBC offers it, TD offers it, RBC offers it. This is just a sample. There are more lenders who offer it.
It sounds like also the trigger rate would probably be different from person to person. So maybe if you could give like the Cole's notes of maybe like how it'd be different depending on maybe like if the mortgage is closer to a certain date, or it just to help people out.
For those who are in this product, you're actually going to find the term trigger rate in your credit agreement, which is not the mortgage commitment that you signed, but it's the credit agreement that you got at the lawyer's office, which is probably sitting somewhere now collecting dust. That's where you're going to find the trigger rate. So everybody has a different trigger rate depending on when they got their mortgage, who they got it with, at what was the discount they took at that point. So look for that term and number in the credit agreement. Now, I can walk you through an example because people will also know if they're getting close to that credit rate, that trigger rate based on their mortgage statements. Because if you look online at your mortgage statement, and you will see how much has been going through towards paying interest versus your principal every month, right? When you make a payment. So if you're seeing that you're getting to a point where your fixed payment is purely going towards interest, or majority of it is going towards interest, then you are very close to hitting that point, which is called the trigger rate. I can walk you through an example. $500,000 mortgage. Let's say a client took a variable rate mortgage back in January when prime was at 2.45. So they took prime -1. So their interest rate is 1.45. Their payment at the time was $1,700 roughly. Okay. Out of that $1,700, Tracy, $600 was going towards interest and $1,100 was going towards principal. Fast forward to today, September, prime has increased to 5.45 as the Bank of Canada raised their overnight rate. So their rate went from being 1.45 to 4.45 today. Their payment of $1,700 did not change. But if they look at their mortgage statement, they will see that that payment is no longer covering principal. In fact, the interest on the mortgage is now $1,800. So there is about $140 shortfall for paying down principal. And that's where this trigger rate kicks in, which is the bank saying, hey, we got to talk, we got to restructure things here because you're no longer paying your principal down.
The question comes to mind is like, what will the banks ask you to do? Do they give you options?
Yes, so the bank will give you options. This trigger rate happens when, as I mentioned, you no longer pay down the principal, or if the renewal has come up on that mortgage and now the payment needs to reflect the new rate environment. So the bank gives you one of three options. The first option is to say, you now owe us this much, pay it in lump sum, okay, to bring down the balance owing, because you stopped paying down principal, right? So here's how much you owe us. You can bring it back to balance by making a lump sum payment. That's one option. The other option is to say, no lump sum payments, but what we want to do is we want to increase your current mortgage payment, and we will look at your original amortization at which you took the mortgage. Let's say you signed up for a 30-year mortgage. Let's take the outstanding balance, amortize it over your original amortization, which is going to push your monthly payment up. And this way, going forward, we ensure that you're actually paying down principal. Or they can offer you to convert into a fixed rate mortgage, which is not always the best option, especially if you are locking into a 5 years fixed right now, because you would be locking in at the height of the cycle. So the bank will give you one of these options. And I would suggest for those who are in this product right now is to actually go take a look at your trigger rate and the credit agreement. Go take a look at your online statement and be proactive. Don't wait for the bank to reach out to you.
Okay. So then say you do realize you could be approaching the trigger rates. What can people do? And how can maybe Streetwise Mortgages help?
So if you had a discussion with the bank and you're finding that the new payment they're talking to you about is not what you expected, is higher than your budget, then there is an opportunity there to shop for better options. That's really what the solution would be, because there are lenders who are offering lower rates. There are lenders that you can work with to extend your amortization beyond what you initially signed for, because they're going to adjust the payment based on what your contract says. If you had signed for 25 years, that's what they're going to readjust your payment at. But maybe that's too high. Maybe we need to go 30. And there are some lenders on the street that are actually offering 40 years right now. Higher interest, but 40 years. So again, if you're not happy about the payment and it's not affordable for you, we can look at other options.
Okay, so you're saying that Streetwise Mortgages, or you could personally just go shop for other places for other products, right? And one of the keys is like maybe increasing the amortization. Looking to an adjustable rate mortgage is what I'm hearing is the other option.
Yeah, another option is to look at an adjustable rate option, because this variable rate product, although it has a fixed payment, because the rates have gone up so high, like they've gone up high so fast, coming down from a very low floor in January 2020, that's what's causing the problem right now. And some clients are going, you know what, I want to be paying down my mortgage as rates rise. And I know there are more rate increases to come, but I don't think there will be too many more to come. Some clients are saying, you know what, when the rate change, I want to increase my payment. I'm okay with that, to pay down my principal. I don't want to be in that position again to have to come up with a lump sum or or lock into a fixed term that I don't want. And then some clients are still comfortable with that product or getting into that product because it does keep their payment fixed. So this is the opportunity to say, okay, what is most important to you going forward? Do you stay in that product or do you switch to something else like adjustable rate? Are you happy with the options the bank is giving you in terms of payment? Is it within your budget? If not, let's look somewhere else. Also, are you okay locking into a long term? Because right now, in my view, clients shouldn't lock into a long term. So if the only option is to lock in for a 5 years term, that's not a good option. That's not even an option in my view.
Right, right. So you're saying locking into, like, when you mean long term, you mean like a fixed rate.
5 years fixed. So locking into a 1 year or a 2 years is okay. But 5 years fixed right now means locking at the height of the rate cycle.
Yeah, for sure. So, I mean, of course, banks want you to do that. That's how they're going to make a lot of money. Oh my gosh, they're going to make a lot of money just thinking about it, because a lot of people may not know that there are other options, right? Thankfully, you're on my channel to explain this to us. So, other options. So, like, I'm just thinking of what, like, even myself, like, what comes to mind is like, what if I just dump in a ton of money into my mortgage? Like, if I had a bunch of savings, like, would that help? Like, or is that too, like, too reactive? Because you're saying there's other options and that might be better fit.
No, one of the options the banks will offer is to pay down the principal through a lump sum payment. You can do that. But you have to say, okay, do I have a better use for that money? I mean, we are heading into a market that will present some opportunities to investors. So do you want to put this lump sum into this principal, or do you want to keep it as a cushion given the period we're heading into, or as, capital potentially to invest?
Yeah. Well, what if some people are in mortgage renewals? Like, so that's probably another opportunity to relook at your mortgage, right? Like, if you're renewing or you're planning to refinance, right?
Yes, mortgage renewals. My suggestion to clients is, I mean, there are clients who are in that window right now of renewal, and there are clients whose renewal is coming up in 6 months. I suggest not waiting until that renewal letter comes through, because fast forward 6 months from now, things will be different from a rate standpoint, from value standpoint, likely. Nobody has a crystal ball, but likely. So start thinking about early renewal, which is a conversation that can start typically with your bank 6 months leading to the renewal, or reach out to your mortgage broker, or we're happy to help to look at early renewal options, so that you are doing things now when things are still rates are going to be reasonably lower than 6 months from now. Let me put it this way.
Right, right. Okay. Well, where can people find you?
Everyone can email us at info@streetwisemortgages.com.
Oh, awesome. Thank you. And by the way, I know, Dali, you're just so humble. I was going to say, you have a financing roadmap. Like, this is a complimentary consultation that your team provides. I'm a huge advocate for it, because I loved it when I first met you many, many, many moons ago, and over the years worked with your team. So I'm going to just say, please, you also get a complimentary financing roadmap to help you navigate in your investing journey if you're looking into buying more rental properties, or just re-looking at your real estate portfolio.
Yes, definitely, Tracy. The financing roadmap is complimentary for every client. The conversations we're having right now are about what's keeping clients awake at night. Where are the pain points? We are addressing that through the financing roadmap conversation, and then we're saying, okay, once we take care of the pains or the headaches, or what's keeping us up at night right now, how can we then position ourselves for growth and continue to move forward with our goals? And that's all part of that conversation.
Awesome. Thank you so much for being on my show and talking about, wow, this it's a pretty terrible topic. Trigger. It's just like trigger. It's like a bad term. I mean, they should have rebranded this trigger.
You guys come up with this.